We making moves. We making major moves. We making moves. We making major moves. We going all in, like we got nothing to lose. We making moves. We making major moves. We making moves.
What is up, everybody? Welcome back to my channel. I'm Mr. Man. I'm the grown-ass man in the Spider-Man mask who gives you fire content and information regarding cryptocurrencies, financial industry, and what's taking place presently. So there's been a lot of chatter around the crypto community talking about SEPA has been postponed from this November till March 17th, 2024. That's true, partly. There's an Airbnb message. Let's jump into this. This is the revised strategy on ISO message freeze. Listen to this, okay? This is for their target services. So, MIB arranges or agrees. Just quickly, MIB is not Men in Black. It is Market Infrastructure Board, okay? Just so we're on the same page. Not the Men in Black, although that would be pretty sweet. So, MIB agreed on a revised ISO message freeze strategy for target services in April 2022. Revised revision of strategy required as original planned date for lifting ISO message freeze coincides with the ECMS go live. What is the ECMS go live? The ECMS go live. Okay, the ECMS or Euro System Collateral Management System is a unified system for managing assets used as collateral in Euro System credit operations. Its go live date has been rescheduled multiple times. Initially planned for November 2023, it was postponed to April 2024 to migrate the impact of the rescheduled launch of T2, Target 2. The Eurosystem's new real-time gross settlement system and central liquidity management model. The ECMS is expected to replace the existing system of the national central banks of the Euro area, harmonizing the and consolidating monetary policy collateral management operations across the Euro system, consolidating it all under one place, right? So we're back here again. The postponed lift of freeze by 6 months from November 2023 to June now to apply staggered approach in implementing real-time ISO messages. So we got a June date, June 2024, for implementation of ISO messages. Coincidentally, it's not when MICA is coming out or now enacting their ARTs, asset reference tokens, and their EMTs, electronic money tokens as well. There we go. That's what that June date is for, okay guys? So, revised strategy allows for maximum testing by all stakeholders as part of a major target services release in June 2024 and June 2025. Don't hold on to these dates as to say that, oh, crypto's going to shoot up. We don't know yet. These dates are segues and waypoints into something else, okay? Exceptions to ISO message freeze strategy continue to be feasible and to be assessed case by case. For example, tips to implement MR 2019 in November 2023 as per SCT Inst. Okay, that's another strategy. I'm going to show you that quickly and then jump back to where I'm at. So here we are now. We are on the European Payments Council. Okay, so here we are. We are on the European Payments Council webpage here, and the migration of the SEPA payment schemes to the 2019 version of ISO 20022 is postponed to Sunday, 17th of March 2024. So that's what's postponed. This portion, all right? There's multiple portions that are going live and enacting. It's not just a giant boom and the entire system's going to go live. There's a whole ecosystem out there and different players that need to spark when they need to spark. All right, it's going to be like boom, 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 boom. It's not just one giant across the system. It's a rollout. It's a phased rollout implementation. So, since the end of March 2023, the European Payments Council has closely monitored SEPA payment scheme participants' preparation to migrate the 4 SEPA payment scheme. Example, SEPA payments, SEPA credit transfer, SEPA Instant Credit Transfer, SEPA Direct Debit Core, and the Business to Business scheme, which is the 2019 version of ISO-based XML standards. Since September 2023, it has also been assessing the operational migration status with all self-declared, SEPA payment scheme compliance, clearing, and settlement mechanisms contracted by the scheme participants to offer SEPA payments scheme-based services. Jumping down to here, now we'll keep reading that. Based on the input collected from SEPA payments participants, the CSMs, in the second half of October 2023, which we just left 2 months ago now, we're in December 1st. The Payment Scheme Management Board of the EPC unfortunately concluded that a successful ISO version migration on November 19th, 2023 could not be guaranteed for at least 2 larger SEPA countries. So everything had worked out except for the 2 larger companies. This is due to reported operational delays and or the need for additional testing time to ensure a safe migration. So they pushed it back to this date right here. Now we're going to go back because there's still more on that page. So here we go. Here is the implementation of what we were just talking about now. Here's the timetable. All right, take it in. Here's the MR update. Here's the ISO freeze dates. Here are the dates for the 2024, 2025, and here's how they're going to be implementing it, okay? So the trilateral group composed of CSDs, CB, central banks, and 4 central banks, the 4 central banks that we just were talking about, developed and discussed 3 alternative options to lift the ISO message freeze. The trilateral group agreed on one of 3 options, which forms the basis for the revised strategy on ISO message freeze. The target services governance bodies, as well as AMI-Pay and AMI-CECO, have been approached with the revised strategy. I'm going to go back to CECO in a second here, okay? So upon collection of feedback of those groups, the revised ISO message freeze strategy is to be presented to the Men in Black for final approval and implementation. It's not the Men in Black. Okay. So, just jump into CECO for a minute here, ME-CECO. So here we have the group here talking about market infrastructure for securities and collateral. That's what ME-CECO is. Here we go. There we go. And we want to go right to this here. So this is how they were going to do it, okay? So, Wave 1, by November 2022, all CDSs, all CSDs, Central Securities Deposits, as well as tri-party service agents, are required to have the capacity to support and to offer ISO 20022 messaging as described in the AMI-CECO Corporate Action Standards and Billing Standards. Eurosystem Central Bank and Eurosystem counterparties have to be able to use these ISO messages, corporate actions, and billing messages. So then Wave 2, a second wave is coming by. By 2025, ISO 20022 messaging for corporate actions and billing would become applicable for actors in Wave 2. So now you know the 2 different strategies, not the 2 different strategies, but the 2 different implementations. At the latest by then, custodians, account services, so custodians, now we're talking about custodians, okay? Those are your wallet providers. Those are your, whatever they're going to call them, banks, I guess. Decentralized banks. I'm not sure what the name's going to be, but they're going to call them something. Should offer ISO messaging to clients that have the capability for ISO standards. Considering the size of Europe financial markets on a global scale, such a move will support further integration for financial markets and reduce costs, risk, and complexity. Annex 3 provides the details on the ISO messaging and scope of the ISO roadmap. So AMI-CECO recommends to SWIFT the following: end of the maintenance equivalence by November 2025 for ISO 15022. Just quickly jumping over here to this ISO. ISO 15022 is an ISO standard for securities messaging used in transactions between financial institutions. Participants in the financial industry need a common representation of the financial transactions they perform, and this standard defines general message schema, which in turn are used by organizations to define messages in a complete and unambiguous way. Perfect. So, that messaging standard for the above mentioned activities and end the coexistence at the latest of 2028 for Swift. The MECO, the MECO strongly believes that greater cost efficiency and effectiveness, reduced complexity, and higher consistency can be achieved with ISO 20022 messaging. There's still one more, right here. MECO recommends stopping the maintenance of the message types listed in Table 2 on Swift Fin as of November 2025. So, Table 2 messages are right. So, the messages they'll be letting go of here, Table 2, are right here. Table 2, corporate action notifications, corporate action instructions, corporate action confirmation, corporate action instruction status and processing advice, and corporate action narrative. Well, that's interesting. MECO agreed to migrate to the tri-party and collateral management messaging types listed in Table 3. So they're going to be going to Table 3, okay? MECO recommends stopping the maintenance of the message types listed on Table 4 on Swift Fin as of November 2025. MECO recommends removing the message type listed on Table 4 from Swift as of November 2028. So let's see Table 4. This is Table 3. This is what a MECO is transitioning to. That's what they said here, right? They are going right there, right here. Table 3. They're going to that. And that's this here. All right, eligible securities. So they're going to be collateralizing securities, collateral value creation request. Ooh, that sounds like tokenization to me. Collateral value creation request. That sounds a lot like tokenization to me. In the UK now, or in Europe. And then Table 4, they are recommending that Swift remove the messages from Table 4, so from here, by 2028. This is what they are going to be doing. Removing tri-party collateral instructions, tri-party collateral status and processing advice, and tri-party collateral and exposure statement. Okay. Is that confusing? Clear as mud? Let's keep going. And this message that we were reading here was from this gentleman named Ulrich Binsale. And this is who this guy is. That's Ulrich Binsale. Let me fix this for you here. Okay, so now that we know who we've been reading from and who he is recommending, or what he's recommending that MECO do and what Swift does in 2025 and 2028 respectively, let's continue going. So here we are now for the unfree strategy. We were talking about the free strategy to begin with, right here. This is the free strategy. Now we're going into the unfree strategy, okay? Update following T2 and ECMS go live revision. So the MIB agreed original ISO message unfree strategy as well as a revision of strategy in April 2018 and in April 2022. Second update of strategy requires, as planned, date for unfreezing message to close too close to revised ECMS go live date. Update to ISO message unfreeze strategy foresees, here's what they foresee now, to reschedule lifting ISO message freeze by 1 year from June 2024 to June 2025 to implement real-time ISO message maintenance releases, or on a yearly basis as of November 2025. So, it sounds like we have a convergence of events taking place in November 2025, or at least 2025. Updated strategy allows for a maximum testing by all stakeholders as part of major target services release in June 2025. Exceptions to ISO message-free strategy continues to be feasible and to be assessed in a case-by-case. For example, tips to implement MR 2019. And here's the timetable for the unfreeze. We've gone over the timetable or checked out the timetable for the freeze. Now here is the unfreeze for the messaging. Okay, so the go live first ISO message unfreeze step in June 2025, allowing for a 12 months freeze post ECMS go live. Envisage start of interoperability testing of EAC level by end of 2024. And to make it known what EAC level is Eurasian, there we go, Eurasian level by end of 2024, required to stop TS2 or T2S, that's target 2, reference our 2025 February. So something's happening in February 2025. Former first two steps merge into one, following or allowing to skip interim MR 2023 upgrade. So that's why they're going live right here in Q2 2024. That's the June date we're reading about there. And then also in June 2025 right here. So here's MR 2024. Now the new update to the MR. They're coming off of the MR 2019 and going to MR 2024. So hopefully now we have a slight understanding of that. I'm sure it was pretty opaque. But this here is SEPA, the Single European Payments Area. Thanks to the SEPA, customers can make cashless euro payments via credit transfer and direct debit to anywhere in the European Union, as well as a number of non-EU countries, in a fast, safe, and efficient way, just like national payments. SEPA was introduced, in this good brighter, introduced for credit transfers in 2008, ironically, after the I guess I want to say the US dollar officially died in 2008, 2009, when the US had experienced, well, the world had experienced that downturn there. Followed by direct debits in 2009, notice the two dates, and fully implemented by 2014 in the euro area. So they had started this plan long before Bitcoin was a thing, right? They started the transfer in 2008, 2009, meaning they had to build up to those dates. Because you see, they don't just create it and implement it. They lead up to those dates. And by 2016, in non-Euro and SEPA countries, the payment integration triggered by SEPA has contributed to the efficiency and competitiveness of the European economy as a whole by eliminating differences between national and cross-border payments by harmonizing standards in all participants. The legal framework for SEPA, which the ECB helped to draw up in close cooperation with the European Commission, is based mainly on the cross-border payments regulations. And the Service Payments Directive, PSD, PSD2, and now PSD3 is coming out. There's three. SEPA migration, end date regulations, and interchange fee regulations. So here is that end date regulation. Y'all know I had to check this out. So essentially, to get something started, something new started, you need regulations to start it. To end a project and to make that project not a project anymore and to make it into reality, that way everyone's using it, you have to end that project with regulations to stop it, to allow this new living, breathing entity to take place and to continue now at that point. I just want to show you this quickly. I don't want to go into this. Look at all these documents. Regulations of the European Parliament of Council. Okay, this is to end it, okay? This is all the nonsense they're chatting about here. So the minimum reserves now. The ECB requires credit institutions established in the Euro area to hold deposits. This goes back to Basel now, right? In Europe, they're talking about Basel 3.1. That's what we're looking at. This is the EBA, the European Banking Authority, talking about Basel III implementation. And once Basel III is implemented for the capital requirements, for holding at that point for the deposits, then they're going to be transitioning to Basel 3.1. I'll just jump into this briefly. The overarching goal of the Basel III Agreement and its Implementation Act in Europe, the Capital Requirements Regulations, or CRR, and directive is to strengthen the resilience of the banking sector across the European Union, so it would be better placed to absorb economic shocks while ensuring that banks continue to finance economic activity and growth. So here we are with Deloitte right now, and they are talking about, just briefly, they are talking about Basel 3.1 in the EU. So now we've transitioned, or will be transitioning, to Basel 3. I say we, I'm not in the EU, I'm in Canada, I'm North America. All right? So we've transitioned to Basel 3, and once they've transitioned to Basel 3, they will be now moving on to Basel 3.1. They'll have to close Basel 3 once they've hit their target and open Basel 3.1 to start this new goal. So when you see dates change, that's why they have to start these things. So the EU Commission published a review of EU banking rules implementing the Basel 3.1 framework. Although the overall level of capital in EU banks is now on average satisfactory, they're talking about it as if it's present, okay? These new rules will ensure that EU banks become more resilient to potential future economic shocks while contributing to Europe's recovery from COVID-19 pandemic and the transition to climate neutrality, climate change narrative. In this alert, you will read more about Basel. Okay, Okay, let's get back to what we were chatting about. So here we are now. Here are the list of SEPA countries, and this is updated for 2023. This is the most current list. This is the 36 countries involved in this. SEPA, cheap, easy, and fast. SEPA is set up in a way that makes banking seamless and quick internationally. Bank transfers can even happen without a fee, as banks are only allowed to charge the same amount for SEPA payments as for their equivalent in local currencies. If there is a fee waiver on domestic transfers in euro, there must be one for international ones also. SEPA enables businesses and customers to use cross-border bank transfers without the hassle and fees associated with conventional banking. For exporters who want to access SEPA, a bank account in one of the member countries is required. While it might be difficult to open an IBAN account in Europe without being formally registered in one of the member countries, we have found a solution with our virtual bank accounts. So, for you and I, not in the Europe account, we can still open a virtual account at that point. That's all these new FIs, I guess, PSP, payment service providers, popping up now. You can benefit from the initiative also. Here is the list of SEPA countries in the Eurozone area and their associated IBAN numbers. There we go. Canary Islands, all right. Right there in Europe, okay. These guys here, the big movers. These guys are the big movers. Follow what they do, you'll be in the know. Okay. And here's the ones that were not listed. SEPA countries where euro or EUR is not local currency. So the euro is not local currency here. They have their own currencies. There we go. Perfect. So we're here talking about SEPA and euro payments. My boy right here, ISO 20022, I call him Rohitku, had dropped this yesterday. Listen to this, okay? In the UK, the Bank of England is renewing its real-time gross settlement, or RTGS, service to deliver a range of new features and capabilities for payments and settlements between financial institutions. The UK's new payment architecture, NPA, for retail payments is also being developed to enable access to a single clearing and settlement mechanism, as we had discussed earlier, using ISO messaging to enable more participants to utilize the UK payment infrastructure and continue to be interoperable with payment services across the globe. That to me sounds like an RLN, Regulated Liability Network. Let's look more closely at the current state of Europe's payments, dive into trends that are helping. Okay, yeah. So here we go. The European Payments Council has also made progress through the SEPA instant credit transfer portion. Remember we were talking, there was 4? They're talking about the credit transfer portion here. An update to the original SEPA program designed to reduce friction with data and cost issues in Euro payments, which requires payments to clear in 10 seconds or less between 26 countries involved. Not all PSPs in the regions are part of the SEPA network, as I had just shown you. Meaning it's not an inclusive solution for all payment providers in the region, while SEPA Credit Transfer delivers on providing instant payments for participating PSPs, hence the word there, participating. It still requires the netting of transactions and the establishment of final positions for settlement by clearing companies or even pre-funding in certain cases. Okay? In the UK, the faster payment system enables payments to move quickly and securely to and between UK banks 24 hours a day. In 2021 alone, the FPS processed 3.4 billion payments, an increase of 20% from 2021 with a value of 2.6 trillion, an increase of 24% from 2020. The system is also growing rapidly in terms of participating financial institutions. 40 banks, PSPs, and fintechs have joined FPS to date. Expanding crypto forward solution like Ripple, crypto-enabled payment solution, which frees up working capital by eliminating the need for pre-funding and removes the need for complex clearing mechanisms in the background. So here we go. I dropped this on top of that now. Chris Larson explaining how to interconnect the SEPA payments.
So am I right in thinking the strategy is then to get kind of a nationwide deployment of Ripple? And if so, how is that going to work? What's the strategy?
Yeah, so the strategy really is now first try to get a bank in each of the key regions of the world. Because if you can connect one bank on ACH in the US to one bank on SEPA in Europe, you have effectively connected all of the banks on those two networks. So you really get a multiplier effect. Now we have this Fedor out of Germany on SEPA, and we have now these two U.S. banks on ACH. Now we got to work on China, we got to work in South America, India, and really continue to spread it and get to some of the bank networks. So definitely getting banks as gateways to bring currencies onto the platform is very important. And then along with that, bringing market makers to make markets between those currencies, cross currencies. We've already been pretty successful there. We have about 7 institutional market makers already. Now it's really kind of filling it up with banks.
Woo-wee! So we got that SEPA connection. We got that SEPA connection. Okay. Next, I want to go on to right here. So if you recall me saying that there are different parts of SEPA phased implementation taking place here. This is one of them that had gone live yesterday, November 30th, 2023. This is the OC-Inst, the one leg out instant credit transfers gone live yesterday. The Euro and SEPA regulations are very beneficial for banks and businesses in participating countries because clear rules and reliable systems enable efficient payments processing. Now the EU is pushing SEPA's multi-currency capabilities. Ooh. We were just reading about Ripple and their multi-currency capabilities within the EU. And we heard Chris Larson talking about connecting one US account to a SEPA account. And essentially you got the entire system with that multiplier effect for all banks. Okay. Now the EU is pushing SEPA's multi-currency capability, and that too in the form of 24/7, 365. Sounds like a rap. I got 24/7, 365. Whatever else is going to be. Just a lot of hand movement, pointing a gun, or I don't know, something along those lines. Real-time payments. The EPC published one-leg instant credit transfer scheme rulebook in March 2023, and the service will start the end of November, yesterday. So what benefits should these schemes offer? At first glance, the task seems to be simple: to connect the EU's own real-time clearing with the corresponding systems in the non-EU area. Payment service providers, Volgo banks. What the heck's a Volgo bank? Okay, I gotta look this up. What the hell's a Volgo bank? I tried, I couldn't find it, I failed, I let you down. Oh well, let's keep going on. I think it's just a regular bank. Can then send and receive payments up to €100,000 in real time via the familiar path through TIPS and RT1. EU countries without the euro and important trading partners with their own currencies will get standardized access to the euro system still. Let's see who are those non-EU countries again. So here we are again. These are the non-euro or the non-local currencies at that point, right here. Bulgaria, Croatia, Czech, Denmark, Gibraltar, Hungary, Iceland, Liechtenstein, Norway, Poland, Romania, Sweden, Switzerland, and the UK. Jumping back. Okay, so this strengthens the euro as a currency because they want more countries to use the euro. They want to get the euro established within themselves and just within their reach, just outside, or should I say their catchment area. This promotes the economy and also offers advantages to citizens in foreign transactions. By presenting a scheme, the discussion can be started and the EPC is therefore in control. And all other real-time clearing systems or banks outside the SEPA area can consider whether they want to participate in Oct-Inst. Financial institutions that act as service providers for other banks are also explicitly allowed. So there is indirect and direct participants. The EPC has set aside the period from March to December 2023, although operations start at the end of November. There it is. For change requests, so hopefully all aspects can be examined. Moving on up to the east side. Here we are at the European Payments Council SEPA Credit Transfer Rule Book, because that's what is going live. And implementation guidelines, by going live, I mean is live. The SCT rulebook currently in effect up to and including March 16th, 2024, is the 2021 SCT rulebook version 1.3 and has no specific impact on the business and operational rules compared to versions 1.1 and 1.2. The 2023 SCT rulebook version 1.1 enters into force on March 17th, 2024, and is applicable up and including November 22nd, 2025. See all these November dates? Formally replaced by version, or should they say amended. So here we are, credit transfer customer to PSPs now. So this is credit transfer customer to PSP implementation guidelines for 2023. These implementation guidelines, or IG, set out the single euro payments area systems. On October 24th, the EPC decided that the migration of the SCT scheme to the 2019 message version would be postponed till March 17, 2024. Consequently, the initial entry into force dates of 2023 SCT rulebook and related IGs has been postponed till November 2020, from November to March 2024. But as we had just read, it has been there. So this part of the rulebook is what's being implemented on March 17th, 2024. It's a particular part of the rulebook that's being implemented, okay? Where am I? Okay. So here we go. On June 16th, 2023, meetings of the EBA, European Banking Association, staff members with stakeholders, Q1 2023. Here's all the meetings, and this is what they're discussing. So for instance, they met with PNB Paribas. Here's the entities there, and this is what they're going to be covering. IRB repair, and CRR planning. Okay, if I do a quick search, here we go. So, Digital Finance Unit, AMC, CFT Unit and Conduct, Payments and Consumer Units, Innovation, Conduct and Consumers, Department and Prudential Regulations and Supervisory Policy Department, Prudential Regulations. Meeting with Ripple. Meeting Suzanne Friedman, Head of the Policy, Andrew Whitworth, Policy Director, and Tommaso Atstasi, Head of Regulatory Affairs. And what are they going to be discussing, or what were they discussing? Key aspects of MICA. Keep in mind, in June, we have asset reference tokens and EMT's electronic money tokens going live. Ripple specializes in both of these, stablecoins and CBDCs, to be addressing at level 2 of MICA and key requirements of crypto asset service providers. EBA's policy responsibilities are under MICA. EBA is the governing body looking after and over MICA and the stablecoins. Classification of tokens following the publication of the BCBS, which is the Bank of International Settlements, Standard on the Prudential Treatment of Crypto Exposure, published in December 2022. To those that follow Mr. Man, this channel here, y'all know this isn't new to us. We've been through this. This is the Basel Committee right here, Prudential Treatment of Crypto Assets. That's the script, the document they're referring to here. We had gone through this long ago in the early days. In the early days, all right? So moving on. This is Global CBDC Challenge, Safe, Sustainable, and Inclusive Finance. All right, organized by MAS, Monetary Authority of Singapore, powered by Tribe Accelerator and Apex, whoever they are. Here are the participants or the partners. Okay. Mojaloop, see that one? Hyperledger, R3, Partier, JP Morgan, MasterCard, AWS, UNHC, which is UN, which was used in the synthetic CBDC out in Ukraine for the e-Hryvnia, OECD. Remember that name as well. I got a video clip for you guys. I know this is going to be a long one, but you will thank me for all of this information. I'm putting this together for you guys. We're going to get Europe and we're going to own this motherfunker. Motherfunker. Got to keep my language soft, all right? This is how they're working CBDCs for this pilot here, okay? Look at the label. What does that look like to you? What does that look like? What does that look like to you? Okay? Inclusivity, yeah. I'm going to pause it here and get to where I want to go. So here they are. They're talking about atomic CBDC solutions, such as atomic settlement. So instant DVP, delivery versus payment. Here's the delivery of that item. Only goes so far until that payment has finally come. When everything reaches in the middle, there's that smart contracts on the rail at that point there. Boom, swap goes this way, you go that way. Boom, settlement done and over. We good up in here. That's how that works, okay? And you see them talking about Intel. We're talking about IBM at this point. Where are we at? This interface reminds me so much of RippleNet. It's unbelievable. Unfreaking believable. But I'm not coming to any conclusions. G&D Filia, these guys for here provide offline solutions for RCBDCs or retail CBDCs. And I believe that's how they were being utilized in this. Let's keep going down. Okay. And here we end up at Stellar and Bit. And Stellar offers the rails and Bit offers the implementation for CBDCs, I want to say. So Stellar Development is a non-profit organization that supports the development and growth of Stellar, an open source blockchain network that connects the world's financial infrastructure. It connects the world's financial infrastructure. I can't say that enough. I can't. Moving on. It connects the world's financial infrastructure, okay? The world. BIT is a regulated fintech company enabling monetary authorities to operationalize their own CBDC through its digital currency management system. that includes applications for stakeholders of a CBDC. Whoa, what happened there? Okay. So, together, Bit and Stellar are testing CBDC solutions in Africa, Europe, as we were just talking about there. SEPA and Africa for the benefit of millions of consumers. Millions. For the millions and millions of the Rocks fans, of Mr. Man's fans, alright? So I got a brief video here. I'm going to show about 3 minutes of it. This is Dan Morgan, the head of policy here of EU for Ripple. Listen to what this man has to say, who they're working with and what's going on.
From Ripple, whether what you do is rocket science, as it seems to be a nice leading question. But you are perhaps distinct from where DTCC is. DC is established, it's an incumbent. You're new, you're emerging. What's your take on blockchain in FMI from what you've heard so far?
Sure, thanks. First of all, thanks to APCO for putting on a great event today, putting together the organisation. So we're thrilled to be a part of that. So unlike the DTCC, Ripple is not FMI, not yet. So I thought it might be helpful to give a run through about who we are and what we do or what we're trying to do, and interesting questions that may bring up in the future around how FMIs and infrastructure will develop. So ultimately, Ripple is a technology company that tries to remove the friction from cross-border payments, primarily by using DLT solutions, but also crypto assets. We sell our solutions to financial institutions, including banks and payment providers. We're focused on cross-border payments because they're hugely inefficient. The costs are they're expensive, they're slow, take 3 to 5 days to settle, opaque and expensive. Primarily because correspondent banking patches together domestic systems which are efficient. And on top of this, the demand is going up, about 22 trillion in 2016, for cross-border payments to around 30 trillion. And the way to send it, correspondent banking relationships are declining, down about 8% annually from 2011 to 2017. So the market is there, and we see the opportunity. Also might add, it costs 10 times more to send money overseas than it does to send a domestic payment in the US. And because of this, obviously, the Committee for Payments and Market Infrastructure, the global standard-setting body for payments and clearing, has, in their recent report, said there is room for improvement in the infrastructure of payment systems. So I think that's an understatement. We're going to focus on payment systems and settlement because obviously FMIs can be central securities depositories and other parts of the broader infrastructure. So what are we trying to do? We've got 3 products in the market. First of which is Xcurrent, which uses DLT. The third is Xrapid and XVIA, which brings the two together. Payment systems today work in a sequential fashion. So banks have relationships with each other. They debit and credit their accounts that they hold with each other through a series of file-based messaging. Obviously, this is slow, can be costly. There's delays, there's risks and uncertainty. And there's a huge amount of FX and reconciliation risks involved. And obviously, it may work if you're sending GBP to USD or Euro to US dollar. But if you don't have a direct relationship, if you're going Brazilian real to Philippines peso, you're going to go through a whole host of correspondence on the way, which is going to be extremely costly and time-consuming, and actually for many consumers are not possible. So what we try and do with Xcurrent, which has 200 customers today, including banks and payment providers, is link bidirectional messaging with settlement. May sound simple, but most correspondent banking today uses file-based messaging, which is one way. This is more akin to a WhatsApp message rather than a PDF file. But the key killer app on Xcurrent is the fact it links to settlement. And you use a technology called Interledger Protocol, which is a DLT permission system to do this. And we think of this like the HTTP of the Internet of Value. It can connect different ledgers. In the fact that we have open sourced it, and it's been used by the Gates Foundation today to connect different mobile money ledgers. So it can connect Bitcoin to RTGS or different mobile money ledgers in Africa, and it can relay and route payments through different networks. So it's the interoperability layer. But like a DLT system, there's no central operator and leverages cryptography and encryption, but it is a permissioned network. then we start to think, well, what is a payment system? Well, payment system is sets of instruments and procedures and rules to transfer funds between participants. So Ripple is a technology provider, but we do actually have a set of rules and governance to ensure that it works in practice. So the members of RippleNet come together to decide what payment finality is, disparate resolution, any technical standards, or messaging fields and interpretation of them fields, and updated through committee as the software updates. So because there's no central operator, you think about in the future around payment systems may develop, the network is developed through a set of rules as well as the technical protocol layer. And that was essential to make this product viable. And we also developed a system where the ledger were all maintained by each financial institution in the permission network because of scalability issues and obviously data privacy concerns, where they were not comfortable at all with using a proof of work blockchain or different systems. So the system is slightly different. If you think about where Ripple sits in that payment system, well, we are a data provider, so the KYC and AML stays with the bank. That's unchanged. The data also stays between financial institutions and does not come to Ripple. So we're a third-party tech provider. We meet third-party vendor requirements, but obviously play a quite important role in fulfilling a payment, but yet don't necessarily touch or transfer funds. So future discussions around payment infrastructure could be potentially developing in this space. But ex-current, today you still need to pre-fund overseas. There are up to 5 to 10 trillion, depending on the McKinsey report you read. I can't believe which one's right. There's a lot of money trapped up in Nostro or Vostro accounts overseas, and that's how payment systems work. You still need to do that with ex-current. So our second product, X-Rapid, which is commercially available but not live. So we'll hold our hands up. And one of the reasons for that we'll touch on is regulatory uncertainty around digital assets. So what X-Rapid does is trying to replace the need to pre-fund by sourcing for liquidity domestically through a digital asset. You may say, how exactly does it do that? Okay, well we'll try and develop that a little bit further. We leverage different institutions than you would do in a typical payment system, typically digital asset exchanges or platforms. A financial institution, payment provider typically would connect through an API to 2 digital asset exchanges. At the local exchange would exchange fiat, domestic fiat, for in our case, XRP, a digital asset. There would be a movement of XRP across the ledger, and that would exchange fiat, XRP for fiat in the beneficiary market. The final leg of that payment could then be over the domestic rails, or they could have a direct account with the exchange. So there's been 2 domestic payments and 1 movement of XRP, removing the need to pre-fund overseas. And particularly, typically, if you're going to go through exotic corridors, low volume corridors where there isn't pre-funding, expensive to do so, and they typically won't have their relationships. That's the type of market that we're targeting so far. So places like Philippines, where we've got some pre-production contracts. So key benefits, obviously, it reduces costs by around 40 to 70% in trials that were run in 2016. It's obviously a lot faster, instantaneous. It links payments to settlement, and it can expand reach to markets which are currently difficult to access. So what does this mean for a modern FMI? Well, the financial markets intermediaries grew up around the same time as dematerialization, where bilateral relationships were no longer efficient. So obviously we're conducting new activities with new assets. So we wouldn't necessarily typically replicate what we're doing. But I do think in some respects we do have to replicate some of that. And if we look around the world, we're starting to see that. The G20 has identified a whole host of intermediaries they're starting to look at. IOSCO is looking at exchanges, FSB is looking systemically, and Basel, again, is looking at from a prudential point of view. So for Ripple, it's a similar view. We think it's clear that classification of the digital asset is essential from a legal framework. Obviously, many people will see what's going on in the US, but globally, thinking, for instance, in Switzerland, where they've identified only through guidance what digital assets are. This has provided much needed certainty to interact and potentially utilize that asset. And the on and off ramps for fiat are going to be a really important part of the financial market infrastructure in the future, including things like consumer protection, AML, which is obviously going to come in through the Fifth Anti-Money Laundering Directive here in Europe. But obviously, in the future, safety and soundness measures, capital, cybersecurity, and a separation of clearing and settlement is going to be key. I think obviously important in the financial system is around how institutions interact with it. So from a prudential or capital perspective, at the moment, digital assets, no matter what regulatory perspective they are classified as other assets. So I think it's important to really try and understand what we're dealing with here, provide some certainty around them particular assets. So that's me. We're not an FMI at the moment. We're reasonably small. I think we raise a few questions about what the future might be.
They're not FMI at the moment. So if you recall me showing you this from that report here from Mass. I want to go back up there. Sorry, just deal with me. Right here, the Global CBDC Challenge. And I was showing you some of the partners there. OECD. Ripple is compliant with everything and everybody. I tell you everything. He look like a man. He look like a man. We are on 13 there. 13 minutes. This is from the OECD. Oh, doesn't have it there. There we go. The OECD Policy Forum Room. CC4. Okay. CC4 Policy Room. Ripple's in everything. Everything. And I said, what? I was on 13 minutes, and that's Dan Morgan right there again. I'm not going to go through the whole thing, but I just want you guys to catch a snippet of what's actually going on behind the scenes. All right?
Conditions at national and international level are affecting Ripple.
Thank you very much, Florent. My name's Dan Morgan. I'm the recently appointed Head of Regulatory Relations for Ripple in Europe. I joined from advising the UK government on their fintech strategy at the Department for International Trade and also helped launch Innovate Finance, which is a membership body for fintech in the UK. So over the last 5 or 6 years, I've seen an evolution of regulators' approach to a number of areas, including open banking, peer-to-peer lending and crowdfunding. And what I can say straight away is that the view of crypto assets is moving very rapidly globally, even compared to these recent developments. So for those of you who don't know, I'm sure many of you do, given the topic of the conference here, Ripple is a technology company which provides real-time cross-border payments, primarily for financial institutions. And I'm going to talk a little bit about what we do to give some context about what we are regulation around crypto assets. So sending money today.
Okay, we've already heard what he said. We've heard his spiel. We know what Ripple does. We know how Xcurrent fits into this, XVIA and XRapid, how they all work together for an interoperable system. That should be all I have for you today. Let me just confirm this. So here, the EU policy, strategy, and legislation for 2030 environmental, energy, and climate targets. Oh, I did want to show you this one last thing. Here's the 2030 agenda from the EU standpoint. I hope you guys have found value in this because I gave a lot of love, a lot of heart, a lot of blood, sweat, and tears. Let me just clean this off. Blood, sweat, and tears in this one for you guys. I want to show you what's going on in the EU and how it's working and what they're doing and how Ripple and Stellar global payment systems are working together. Love you guys. Catch you on the next one.
We making moves. We making major moves. We making moves.